Hello, today is April 7th, 2019. I've been away from the market for a few days. The last call I made said that the short term was a bit tenuous, but the long term, the picture has improved dramatically. Pretty much I'm going to say the same thing. Friday's pattern was the one with the early low and the late high, tends to rally all day, closed near the high. It's not particularly good when you have the pattern with the early low and the late high with 5 irrelevant minutes left to trade after gapping up and hitting a new high. You are under all the day's highs. But even though that's not good, all it takes to rectify the situation would be to gap and promptly take out today's high when we open Monday. Rallying all day Friday usually carries through to Monday. We've gapped up 7 days straight. I can't say it's impossible. We gap up Monday, and frankly, even though Monday's pattern is the one with the early low, I don't think that precludes gapping up Monday. And gapping up Monday would take all this negativity away and the rally would continue. I think that's the most likely thing. If it doesn't happen, we should know before the open. And of course, if we get a down instead, it has very negative implications. We had an ultimate sell signal that's been satisfied. This move down, this move up were all said to be false and should retrace, and that's happened. There are a few negatives short term. This is the DeMark combo and sequential sell, 2 days more of piddling around and or going up, even down slightly. You'll have 913, 9 sell signals, but again, these haven't worked on this rally after working well since the 1970s. If we get a drop after the 913, 9, and remember the last one can be early, which means Tuesday, you can say, well, it'll work this time, but I'm not betting any money on this. I'm just reporting it and not betting any money on it. It is somewhat negative that you're over the upper Bollinger Band on the McClellan oscillator for the NASDAQ, but until you reverse through it, there really is no signal. That's pretty much all the negatives. What's positive is after this big rally, breadth hasn't deteriorated at all. It's pretty hard for me to see a sustained drop or a collapse when the breadth is this good. And because the breadth is so good, I think we're going to have to change our preferred wave count. I've had this wave count for a long time, saying we completed 5 waves up. It was the preferred count. It isn't the only way to count it. I don't think it currently explains the rally we're having now. This could still be an expanded flat, and the count might still work, but it's not the only count. I think the most likely explanation is that this consolidation was just a correction, a 50% correction of this up move. This is a perfectly valid count too. This is 3 waves up, 3 waves corrected. We should be in a wave C up. If this count's correct, then the bull market would then rage on. And if wave C is equal to A, we're over 3,400 and practically at 3,500. Now, it's not the only way to count it, and it might not be the right count. I don't know. I just take things a day at a time. But I think it gives a clear explanation of the rally we've had since this low. If this isn't a high, if this is just a correction of the up move, and the rally continues. It's not a lock, but it's a plausible count. So, Monday, we need to gap and take this high out early. I think that's the most likely thing to happen, and the rally would continue. There is some short-term possibility of a correction here, even if we do get the gap up. which ought to come before the end of next week, this week, I guess now. But the longer-term picture has improved dramatically. There have been a few times I thought the whole bull move from 2009 was over. That's what I certainly thought for the past year or so. But that's not the way the market's acting now. It looks like after a possible correction, starting reasonably soon, possible, that we could have much higher highs in front of us. And that's today's call.